Welcome traders to this new market review for week 14 for Nasdaq futures. What a week. But first let's dive into the economic calendar for last week. So we started the week on Monday, the final day of March, with no high or medium impact news. On Tuesday we had PMI number coming out, JOLTS job openings. On Wednesday we had the ADP non-farm employment change and President Trump speaking at 4 p.m. where he announced the import tariffs for the other countries. On Thursday, 8:30 a.m. unemployment claims, 9:45 a.m. PMI number and 10 a.m. PMI number coming out. And Friday, the main headliner for this week, which was the NFP release. Next to that, the unemployment rate came out, the average hourly earnings, 11:25 a.m. Fed Chair Powell was speaking, and 12:45 p.m. FOMC member Waller was speaking. So, if we dive into the weekly chart, what a huge, giant down close candle we had this week. Traded for 2,656.75 handles towards the downside, 13.25% down, which is absolutely insane. So let us add the annotations, the premium and discount arrays we were monitoring. Let's go to the daily chart. So we started the week on Monday, small up close candle where we took the sell side below these relative equal lows and we traded up. On Tuesday, a small range as well towards the upside. On Wednesday, we had pretty much buy side delivery throughout the day, but after the the import tariff announcements of Donald Trump, we totally reversed towards the downside. Note where the high was formed inside the premium wick consequent encroachment on the weekly chart, and from there downwards sell side delivery. On Thursday, a relative smaller day in comparison with Friday, so we opened inside the busy over here, which I annotated as a bearish inversion fair value gap, traded up into these relative equal lows, and from there traded towards the downside. And on Friday, a huge bearish day. I think point wise it's the largest day for Nasdaq ever, because we dropped 1325.5 handles towards the downside. We didn't trade into our final objective, but most of our downside targets were hit. The discount wick consequent encroachment on the monthly chart was hit. The sell side liquidity pool around 18,340 got hit. The discount wick consequent encroachment on the weekly chart at 17,870.5 got hit, and we just fell short of trading into the relative equal lows at 17,351 and 17,113.25. So let's dive into the lower time frames to see what happened. On the 15-minute chart, on Monday, classic buy day, consolidation, waiting for 9:30 a.m., which was this huge down close candle over here, manipulated towards the downside into that future bearish inversion fair value gap consequent encroachment, and from there we reversed towards the upside, creating the high of day in the final hour of trading. On Tuesday, pretty much comparable run with Monday, because we had buy side delivery, creating the low of day in the first hour of trading and the high of day just after 16 p.m. trading into the SIBI on the daily chart between this candle's low and this candle's high over here. On Wednesday, creating the at that point the low of day inside the first hour of trading. From there, buy side delivery into that SIBI on the daily chart, which functioned as a reclaimed SIBI. Traded up into the premium wick consequent encroachment on the weekly chart just after the import tariff announcements from Donald Trump. And from there, we reversed towards the downside. On Thursday, high resistance liquidity run, creating the regular trading hours high in the first hour of trading and the regular trading hours low inside the final hour of trading. And Friday, huge down closed candle. So opened over here, we took sell side first, trading up, creating the high of day during London. During London lunch, the drop started even prior to the NFP release. 8:30 a.m. is this up close candle over here. We pretty much traded back into this SIBI on the 15-minute chart, and from there we turtle souped this high and reversed towards the downside. Yeah, huge high resistance liquidity run, but the volatility was absolutely insane. Note what happened. The regular trading hours high was created in the first hour of trading, and from there we took this low over here, deep retracement, and from there we traded towards the downside and just fell short of trading into our sell side liquidity target on the weekly chart and the monthly chart. And note the bodies over here respecting the discount wick consequent encroachment, which now functions as a premium wick consequent encroachment. Note the high of this candle. The high came in at 17,870.5 to the tick. Absolutely beautiful. Okay, let's dive into the 1 minute chart. On Monday, we didn't have any high or medium impact news, but it is a Monday of a NFP week where we want to push our edge, even though we didn't have any high or medium impact news. The following charts on Monday, Tuesday, Wednesday, Thursday, and Friday will contain the first presentation, annotated in blue over here, and the opening range gap. And let's see how price treated these levels. So during London, pretty much consolidation, waiting for 9:30 a.m. Opening bell, created this short-term high inside the regular trading hours, displaced towards the downside, creating this first presentation over here, creating the session low over here. From there, huge displacement, retracement into this up close candle over here, into this volume imbalance, and into a higher time frame busy, which was over here. From there, pretty much consolidation, and during the PM session, yeah, we had a beautiful run into the opening range gap consequent encroachment. And finally, during the 15 PM macro, we traded into the opening range gap high, closing the opening range gap, creating the regular trading hours high just 1 minute prior to 16 PM, which happens quite a lot. So maybe we can add some extras over here. I forgot to mention it's a discount opening range gap of 246 handles, which is usually indicative of a continuation pattern rather than trading back into the opening range gap. But even though it's still, yeah, we'd still trade it into the opening range gap. Let me see. Yes. Yes, okay. So if we take that opening range gap and we use standard deviation levels, you can see that if you add quarters to it, the negative 0.25 would be around here, negative 0.5 would be around here, and note how the bodies respected the negative 0.75 level over here. This is purely algorithmic. This has nothing to do with random buying and selling pressure. So trade it up and note that the high is created around the 1.25 standard deviation extension level. This is all I'm gonna say for now. Do this for the other days and you will find absolutely yeah, magic inside this this theory. Yeah, so low of day created in the first hour of trading, high of day inside the final hour of trading, where this price action was part of the manipulation of the weekly candle unfolding, creating the upper wick of the weekly candle. Okay, for now, let's close the opening range gap, but extending the first presentation, as this is the first presentation of the week. On Tuesday, the market opened at 9:30 a.m. at 19,380.5 with a discount opening range gap of, I think, 43 handles. Note how long it takes for price to create the first presentation, which is indicative of a messy opening range. But 9:47 a.m. came along and the first presentation was created over here, again annotated in blue. Note that the opening range gap consequent encroachment got reached within the first half hour of trading, but didn't really provide any trade opportunity unless you longed something over here on the 15-second chart towards opening range gap consequent encroachment. But that is just a minor run. So manipulation towards the upside, close below the first presentation, treating it as a bearish inversion fair value gap over here. Create the low at 10:21 a.m. within the first hour of trading. From there, classic 2022 model, where we took these relative equal lows, displaced towards the upside, trading back into the busy over here. And from there, we went from a sell program into a buy program. Note that we traded back into the first presentation, which can often be used as a target or as a entry technique. So trading back into it, retracing into this busy and into the opening range gap consequent encroachment. Displacement was next, where we just took this intraday high over here, or intra-session high rather, retracing back into the first presentation, and from there, boom, buy side delivery. During the PM session, we retraced into the first presentation, into the opening range gap, created SMT over here, and note that we closed above the first presentation, treating it as a reclaimed busy, because it was a busy, functioning as a bearish inversion fair value gap over here, as a reclaimed busy over here, and as a reclaimed busy over here during the 15 p.m. macro. We left these relative equal highs over here, and from there a beautiful run occurred. So if we take the opening range gap again, I'm not gonna annotate all the standard deviation levels because it would be too messy. But I want you to look at this. Negative 2.5 standard deviation is annotated over here. Note how the bodies are using this level to find support. Trading towards the upside. Note the reactions with the standard deviation levels, especially over here. And creating the high inside the 6 standard deviation level. Yeah, that's all I'm gonna say for now. I want you to backtest this for yourself, and then you can find value in it. Let's go to Wednesday's price action. Wednesday was a beautiful day of price action as well. It was actually the day where we reversed, where we went from a buy program into a sell program after the import tariff announcement at 14 p.m. where we created the high of week on Wednesday, which often happens, but not usually, because usually it's created on Monday or Tuesday, but for this week on Wednesday. So during London, sell side delivery. Shorts were profitable. Note all these beautiful relative equal highs over here. IBDA doesn't like to leave these things intact. So we waited for 9:30 a.m. to come along, which happened over here with a discount opening range gap of 280.75 handles, which is huge. So 9:30 a.m. opened over here. 1 minute later, we took this short-term low over here, and from there, buy-side delivery was next. Opening range gap consequent encroachment got reached within 6 minutes of time. Don't be mistaken, if the opening range gap is 280 handles, then the run from opening range gap low to opening range gap consequent encroachment is around 140 handles. Within 6 minutes, you could have been done for the day or even for the week. Yeah, let that sink in. Okay, first presentation created at 9:33 a.m. over here. Wasn't used as a busy, but rather price continued towards the upside. It was in a rush to take these relative equal highs over here created during London and Asia. And as I explained multiple times, when the first presentation isn't used as a regular fair value gap, inversion fair value gap, or a reclaimed fair value gap, then I anticipate the first presentation to be traded to later in the day, taken into account that on the higher time frame we were bearish. It would be reasonable to expect this run during the regular trading hours to be part of a high time frame manipulation, only for price to trade later in the day into the first presentation around 19,380. So let's see what happened. Let me one more time add some magic to the charts. Okay. If you didn't find value in the opening range gap extensions yet, then probably you will find value in it right now. So -1 annotated over here. Note how IBDA is using this level to trade, to find support and trade price into the -2 standard deviation level over here. So the standard deviation level comes along at 19,889.5, and this candle's high comes in at 19,890.25, just 3 ticks above the standard deviation level. And if we extend this level a few minutes further in time, yes, like this. Okay, note the 2.5 standard deviation level where the high of day was created, and from there we reversed. So don't be mistaken, this minor manipulation move over here, within 4 minutes 325 handles towards the upside. Why would price do that? Because the 2.5 standard deviation level is over here? No. Created the intraday high over here, trading towards the downside, engineering buy side liquidity rather above this high over here, waiting for the for President Trump speaking and announcing the import tariffs, only to take the buy orders over here, and from there reverse towards the downside, and 903 handles within 18 minutes of time, which is absolutely insane and absolutely manipulated if you ask me. Note we just fell short of trading into the -1 standard deviation level, but we did it after the new day opening gap was created over here. And note that price traded back into the first presentation, which wasn't used as a oh, forgive me, it was actually the first presentation of Monday. It's the first presentation of the week, and note how IBDA is using this level in the future. And if we take the first presentation of Wednesday, yes, there you can see that we dropped, we stopped dropping just before the opening range gap low was reached. Note the accumulation of sell orders, if you want, into the first presentation of Wednesday. Boom, into the first presentation of Monday. Yes, but to be honest, you could have captured a long over here if you were fast and you used a alternative entry technique than the first presentation. You could have captured a long, but this run over here, even if you go into the lower time frames at the 15-second charts, you can see that you weren't able to capture any short opportunity over here. But yeah, Thursday and Friday were on the corner, so let's dive into those days as well. Okay, let's dive into Thursday's price action, the day ahead of NFP. Be aware of that. Okay, note that we opened at 19,105. Note how price used the first presentation created on Monday. That's why you want to extend that level throughout the week. Sell side delivery, pre-market, opening bell. We opened with the largest opening range gap I've seen so far, due to the huge drop after the import tariff announcement from Donald Trump. 1023.75 handle discount opening range gap. Traded up, taking this relative or this short-term high over here, trading into this SIBI over here, trading towards the downside. Note that you could have captured a beautiful short. So what happened over here? We took this short-term high over here. Let me see, with buy side above it. We took it, traded below the first presentation, treating it as a bearish inversion fair value gap. Trading one more time up because we had a SIBI over here and a busy, so a BPR over here. Fell short of taking this high, and that is your sign that we go from a buy program into a sell program. Note that we created this. Okay, maybe let me zoom in. Creating this short-term high over here. Trading back into the rejection block over here. Note how price respected the first presentation over here, and you could have captured a short, but it was the day ahead of NFP, so I hope you didn't take any trades. And if you are more experienced and you did and you captured this short, then yeah, kudos to you. We left these relative equal lows pre-market. We took them. Let me see. Okay. Yes, so this drop over here, you could have captured this one. Yeah, and be done before New York lunch. Huge retracement between 11:30 a.m. and 13:30 p.m., which is this buy side delivery here, just high time frame retracement into the opening range gap. And during the PM session, we pretty much continued towards the downside, taking the AM session low in the final hour of trading. And even though it's a day ahead of NFP, the principles of IBDA still work. High of day in regular trading hours created in the first hour of trading, and the low of day 1 minute prior to 16 p.m. Hey, second time this week. Maybe you should be aware of that. And note how we traded into the negative 0.25 extension level from the opening range gap, where the low of the regular trading hours is created. Note the standard deviation level comes along at 18,668.25, and the low was created at 18,664.75, just a few points below the standard deviation level. Why do you want to use these standard deviation levels? Because it gives clarity of where price is likely to go, and you can use it as targets. And that's yeah, for me it's an eye-opener, and it's absolute it's like magic. It's just beautiful if you love price action. So yeah, that's it for Thursday's price action. Okay, last but not least, Friday's price action. Absolutely insane price action. You gotta love this, because this is why we are trading, and these days are the days where the most the most money is made. So, London session, trading towards the downside first, creating the low during the 1 a.m. macro. Note, huge buy side delivery was next, and the 2 a.m. macro is where we reverse towards the downside. And during the London lunch at 6 a.m. macro, we displaced towards the downside. I think it has something to do with the reaction from other countries with import tariffs, but I'm not sure why this took place prior to the NFP release. But look what happened next. So, opening bell, this up close candle over here, we opened with a discount opening range gap of 536 handles. Yeah, due to the large down days. So creating the first presentation over here, which is this SIBI with volume imbalance at the bottom included around the opening range gap low. Traded towards the downside, pushed through the opening range gap low. Note how the first presentation is used over here. Could have easily captured a short over here. Then after 11 AM a retracement is likely to occur. Note what happened over here. Yeah, we just fell short of trading into the opening range gap low and fell short of trading into the first presentation and fell short of trading into these relative equal highs. Which kind of surprised me, to be honest, because I was expecting some more buy side delivery into the relative equal highs and maybe into the lower quadrant of the opening range gap, but yeah, it didn't unfold. And as a result of that, we had a huge down day. Again, high of regular trading hours created in the first hour of trading and the low of day 4 minutes past 16 PM created in the final hour of trading, low of day. So inception, first hour of trading, terminus, final hour of trading. But let's add these standard deviation levels. Okay, so this over here and higher is the opening range gap, and anything below the gray levels are the standard deviation levels derived from that huge opening range gap. So sell side delivery into the negative 0.25 level. Note how IBDA uses this level multiple times. Negative 0.5 level. Must be random again. Negative 0.75 handle, standard deviation level. And over here the negative 1 standard deviation level. So when we drop from the first presentation to this low over here, we are talking about almost 500 handles within 1 hour of trading. So that's pretty insane. And if you see that price is trading towards the downside but doesn't really respect any standard deviation level derived from the opening range gap, leaving these two relative equal lows intact, then you know that this buy side delivery is just manipulation, only for price to trade later into the negative 1 standard deviation level. Over here it looks like this candle's lows trading into the negative 1 standard deviation, but it just fell short. And later during the PM session we actually traded into the negative 1 standard deviation level, retraced into, just fell short of trading into the negative 0.5 standard deviation level, trading into this SIBI over here. And from there a final push towards the downside into these relative equal lows, into the negative 1.25 standard deviation level. I actually didn't want to share these standard deviation levels derived from the opening range gap, but it is it holds too much value for me not to share it, so I hope you can use it in your future analysis. Okay, well, this was it for this week's market review for week 14. I'll be back tomorrow with a market game plan for next week, for week 15. And I want to wish you a very, very nice weekend and an even better trading week ahead. See ya.